We have been talking about a polarized world in economic terms, in markets, which has led polarization in politics. We have been talking about the market being very close to having a mistake, and we had it with the Brexit vote. Before the Brexit vote, because volatility was very low, we put protections in our portfolios. We benefited from the volatility and took profits as Brexit happened unexpectedly. So starting with polarization on the economy. Brexit impact on the economy is going to be very, very limited. Brexit is mainly about potential significant slowdown for the UK and to a lesser extent for Europe. We're talking about 0.5 impact for European economy. Worldwide, UK is only 4% of global GDP. So it would only affect between 0.1 and 0.2. What has been Brexit impact on financial markets? As we expected, the currency has been the most hit, around 14%, in line with our expectations. Equity markets have corrected also, especially in local markets, FTSE 250, and then European markets. We always said that Europe did not have a Brexit problem. Europe has a banking problem that has been brought forward by Brexit. Because of that, European banking sector has been the second worst affected. Government bonds have behaved very well, as we predicted. Probably the one that has surprised us in the upside is being UK gilts, more on technical factors than on fundamentals. Credit markets have behaved very sensible, also pointed to not a slowdown or a global recession fears. We continue to have a position there, included emerging market corporate debt in hard currency. So what is Brexit implication on central banks? Out of everybody, we can say that in the UK, Mr. Carney, Governor of the Bank of England, had a plan. And he's been out there putting measures and talking about future quantitative easing and rate cuts in order to support the economy. The big problem is that the ECB is running out of German bonds to buy. That's why we think that the next step from both central banks is to do more on the fiscal side together with governments. We expect helicopter money to come in Japan and maybe UK in the next coming months. So that leaves us with the last question, and probably the most difficult to predict. Brexit implication on politics. The result of the Spanish elections was better than expected, and we can see how the worse it gets for the UK, at least in the short term, the most likely is for incumbent parties in different countries to gain ground as seen in the Spanish elections. And that will take some pressure from financial markets. Having said that, what Europe needs and what we're going to watch in the coming weeks is a recapitalization of the Italian banking system, probably to be done after the stress bank test in July 29th. So it's going to be a long summer again. What are we doing in portfolios? We put protection. We keep saying that we need to trade volatility in our clients' benefit. That's what we've done. We're going to watch that volatility in the coming months, and especially ahead of what is going to be the next hiccup, potential hiccup in markets, call it US elections, when the debates between Hillary Clinton and Donald Trump comes to market.